that doesn't look good on your credit.
Why not?
Because it makes it look like that you need a loan to sustain your finances month over month. It looks like that you can't budget and you can't financially. I had a lender tell me that because there was a client who had like World Finance. It closed, it reopened, it refinanced, it opened again, it refinanced, it opened again.
You want the boss's view, you gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association. Yeah, see, that's the association.
All right, guys. Welcome. This is the show where I sit back and relax.
Yep.
Welcome to the YMA Nation. Welcome to YMA Nation podcast, episode number 30.
Wow. We're on 30 already.
Episode 30, and today is Real Estate Wednesday.
I'm excited.
I am Joe Wallace, and this is
Rebecca Wallace.
And this is her expertise. So today we'll turn the show over to Rebecca, and she has a very interesting topic that she's going to cover today, guys. Make sure if you're on right now, like, comment, and
subscribe.
Click the subscribe button. And also down in the comment section, hashtag YMA Nation to go into our drawing at the end of the month.
We got all kind of news today.
Okay.
So
are we talking about weather, and we're going to talk about the accident on the 85 freeway?
We're talking about with Masters Credit Consultants and the Pyramid Group.
Okay.
And the new package that we have available.
You going to roll that out on the podcast?
Yeah.
All right, guys. We're talking about everything.
I figured this would be a great time to introduce it.
And a great platform, too.
And also, y'all get the exclusive because we're just starting to roll it out on other platforms. So this would be great.
Let's go.
All right. So we'll start with the Pyramid Group package that is a new package under Masters Credit Consultants. So what is Masters Credit Consultants?
What is the Pyramid Group?
We're going to talk about both. So Masters Credit Consultants is the credit repair, restoration, rebuilding firm.
Okay.
They can be reached at 864-249-9466.
You heard it, 864-249-9466. We know this by heart because it's the best credit repair company. It's www.masterscredit.com. Make sure you check them out.
Yes. So we have created a package under Masters Credit Consultants that now includes the Pyramid Group, which is brokered under Keller Williams. So we have our buyer agents. We are located in the state of South Carolina. However, you can still use this package even out of state because we can refer you to an agent in your local area.
So
okay?
If I'm in Texas, I can still call.
You can still call, and we'll still set you up the meeting with the real estate team, get all your goals. We can pass that on to the referral agent that we send you to in your localized area.
We just had a client actually in Texas that just closed on a home.
Mm-hmm.
Her and her beautiful family.
Yes. So let me tell you guys about this new package. I'm excited.
Let's hear it.
So the first bullet point. First month is free.
Hold on.
First
I didn't say anything. We already knew what the package was.
If you are signed up through the Pyramid Group.
Okay.
What that means is you have to be in an agency agreement with the Pyramid Group.
Okay.
And you get your first month of credit repair free.
So if I'm trying to buy a home.
Yes.
I contact you guys.
You contact us.
And I say, hey, you know what? My credit scores are at 550. And then you guys put me on a program.
Well, I'm getting to that.
Oh, let me not move too fast.
Okay. You will receive an expedited package at the discounted rate of $60 per month, or the basic package at a discounted rate of $40 per month.
Wow.
So this is what happens. This is how you get the offer. This is what you do. You call in to Masters Credit Consultants, 864-249-9466.
864-249-9466. We got to get the program where we like point and then put like the phone number on the screen.
But we could put it in the...
It's down in the description.
It's in the description. So you guys look there. You're going to say, I'm interested in the Pyramid Group package.
The Pyramid Group package.
When you say that, our credit specialists are going to know exactly what you're talking about, and they're going to route your call to who you need to speak with to get your meeting scheduled for the Pyramid Group brokered under Keller Williams.
This is for people that's trying to become homeowners.
This is for people trying to become homeowners.
What's interesting...
That's why I'm rolling it out on
the Real Estate Wednesday. What's interesting about this, though, what I enjoy this is I want to become a homeowner. I'm going to improve my credit. But once I become a homeowner, guess what? I got great credit.
Exactly.
That's going to carry me on throughout life. For when I need to buy a car, when I want to apply for credit cards, everything.
Everything.
Yeah.
Right. And we wanted to look out for the people who entrust in our team, our Pyramid Group team under Keller Williams to help you in the home buying process. This is our way of saying thank you for trusting us. We want to give back to you for trusting us with your future and becoming a homeowner.
Okay.
So this is the way that we have created to be able to do that.
Okay.
So y'all heard it. Do it.
You heard it.
It's great.
Right here.
And the thing is, you get a free consultation.
The call is free.
So you get a free consultation. If you don't need credit repair, then we can go ahead and get the process started for you.
For home buying.
Right. So all you have to do is pick up the phone, call, and get information.
I love it.
You get free information anyway.
I love it.
Right? So that's the first thing.
First thing done.
That's going to lead us into our topic for today. Because I went through and I went back and I looked at everything that we've discussed. Go ahead.
Question. What if I am an agent or I am a broker and I got clients that can't be approved, so I want to refer them to Masters Credit to get their credit where it needs to be, so then they could come back to me and get their pre-approvals?
Right. We have a program for that too. So
I'm trying to hook you guys up, guys. So if you are an agent or a broker, you might as well get your clients over to the best team, Masters Credit Consultants, to help your client scores get where they need to be. Then they come back to you and they're ready to become pre-qualified.
Right.
Masters Credit Consultants, www.masterscredit.com, 864-249-9466. And it's also down in the description. Let's go. I'm ready.
Okay. This is leading us back into our topic because I went back through and looked at, we've given you so much information and we do so in such a short period of time. So I wanted to go back and really take time with each step because I don't feel like that we've really delved into the step-by-step process, like in a slower fashion. So I went back and I said, what's the first step in becoming a homeowner. So taking it back to step one.
Step one.
Square one. Because we always talk about having a plan.
Okay.
And what you have to do to reach your goal of becoming a homeowner. Well, step one is getting your credit where it needs to be. That's your first step, is understanding, is my credit where it needs to be able to qualify for a home loan?
You got to meet the qualifications.
You got to meet the qualifications. It don't matter what agent you have. It don't matter where you're looking to buy a house. It don't matter if you want a 3-bedroom, 2-bath, or a 5-bedroom, 3-bath. It don't matter if you want a 1-story or 2-story. None of that matters if your credit is not going to allow you to qualify for a mortgage.
Right.
Right? So we look at what can you do proactively to ensure that your credit is where it needs to be able to qualify. You want to say something? Go ahead.
I'm excited. I want to hear the steps. What can you proactively do?
What can you proactively do? So a lot of times we see that people just don't know where their credit score is at all. Like they don't have a clue. Like, where's your credit score? I don't know.
Or they say Credit Karma
Karma says this, or a lot of people don't have a credit monitoring service that tells them all 3 bureaus scores and reports month over month so they can see what's on their credit. A lot of people don't even understand how to read a credit report. They don't understand the aspects of the credit report that are impacting them. So, for instance, today we had a prospect call in.
Okay.
And the prospect says, I went to Movement Mortgage, and they said my score is a 604, and I need to be at a 640, and I need some help with my credit, right?
Right.
And so we go through. We can schedule you a free consult. We can do a free consultation for you, review your credit file, let you know what's on there. This is the importance of having a credit consultant and counselor, someone who can help you in that aspect, to understand your credit file, to understand what you need to do to meet that goal. So he was like, well, it's a lot of medical bills on there. And, you know, my wife had surgeries, and I know it's a majority of medical bills. And, you know, I don't really need it to be a 3-6 month process. I need something done like right now.
Right.
Then you're not realistic about your credit.
Right.
You're not realistic about what the time frame is going to look like in getting this handled. And
I just think it's that they just don't know, though, because everybody wants it now. If I could go from a 810 to 849 tomorrow, like, I would want that now. So it's just understanding it's not anything I could do to my credit to drive those scores up, but allow it to age because I understand credit.
Right. So a lot of times it's, if you don't understand credit, if you don't understand what's going on in your credit file or the things that you need to do to get your scores where they need to be, then you need to seek advice.
Yes.
From
it's okay
qualified
to do that
people.
too.
It's okay to do that, because 9 times out of 10, they're going to tell you exactly step by step what you need to do. If you have no revolving credit, a mortgage lender's 9 times out of 10 going to turn you down.
Can you tell them what that means?
So if you don't have like a secured credit card, if you don't have a credit card through a bank like Capital One or First Progress or Discover, or where you're building your credit out, and you've maintained that over a certain period of time, and you're keeping the balance on that credit card low.
Right.
You're not overutilizing the line of credit that you're given, and you're paying it on time month over month. And some lenders, if you have a late payment within a 12-month period, they won't lend to you.
Wow. So you can't even be approved for the mortgage if you have a late payment.
Right. So
on some lenders.
Right. So if you have consecutive late payments on an open account, like an installment, like a loan, Your auto loan,
your car loan,
your
right.
personal loan, student loans, or your student loans are in default. They're in collections. You're in collection with a government loan. A lender isn't going to loan to you.
What that means is that the bank sees it is if you're not going to be responsible to pay on this loan, why would we give you a $200,000 loan? If you have a car loan that was
30 days late, 60 days, right?
You know, like 5 months ago, and that is a $10,000 loan
that you couldn't manage,
right? So I'm going to give you a $200,000 mortgage, right? So that's why the banks see it. That's their perspective on how the banks see it.
Right. And then we see also, you know, I have this time frame of, and this goes to planning, right? Because what you get is, well, my lease is up in 6 months. My lease is up in 4 months. My lease is up in 9 months. Well, now you've put yourself in a position to where, you know, you are relying on a service provider to get you where you need to be in a certain amount of time that may not align with that service provider's time. And you've put yourself in that position. So you have to adjust what makes sense. You know, like you can't say, well, I need to be out of here in 4 months. You call Masters Credit, and I can tell you that they're going to say their expedited package is a 6 to 9 month
approximate 6 to 9 months.
Approximate 6 to 9 month process. That means it could be 6 months, it could be 9 months, it could be 10 months, it could be 5 months, it could be 4 months. It could be anything in that range, but you're saying, well, I need it done in 4 months. Well, you know, we'll try our best. You know, that specialist or that you know, that company is going to try their best to get you there. But if you're 2 months in and you have a new collection added, guess what? You've done started that 6 month to 9 month process all over again.
I had to do that. That is the biggest thing that is seen, is that I don't think people understand. And on Wealth Building Monday, I would like to schedule an episode that breaks down episode that breaks down the credit and what impacts your scores, because I think people they don't understand that you can't move up and then have something happen and bring you back down, and then you think the process don't work. And we see that all the time.
All the time.
And
I know it's a little bit off real estate, but it's really not, because it goes hand in hand. It's
right.
So like credit and real estate is like this.
Right. You gotta have
credit to be able to buy a house.
It's like gas, right? I want a car, unless you got an electronic vehicle, but you gotta have gas to put in that car. And then you can't complain that I ran out of gas. You're responsible for that. You should have kept your eyes on your gas gauge to know that you was getting close to E.
And you needed to go to the gas station.
And then they'll say, well, you know what? I'm just going to leave my car here.
Yeah.
You ran out of gas and you go leave your car there. But that's just an analogy of how people think when their goals is, I got to get to a 640 to buy a house. Mm-hmm. And I went from a 540 and I'm at a 610 and I'm almost there. And then a collection hit their credit, which it was an item that they had at some point. It hits their credit and it drops them back down to like a 560. So they, in their mind, I'm right back to where I started.
Right.
But most collection companies, they call you first.
I started off checking it every other week, just like most people do. Then it got out of control. I couldn't help myself. I started checking it day after day after day. I didn't realize that I was becoming addicted until my wife said something.
What did she say?
She said, it's just a credit score, relax.
Are you checking your credit score?
Huh? Hold on.
They don't just throw things on your credit. They send you mail.
I mean, that is the most preventative way that we try to tell people is if if you don't understand what you're getting in the mail, then
Send it.
let us analyze it. Let Masters Credit analyze it and tell you what to do if it's not on your credit file. That means it could be prevented from being added to your credit file.
That's what I'm going to talk about when I do my special episode, is that just because it's not on your credit and it comes in the mail, don't ignore it.
Right.
Don't ignore it. Be preventative.
Be preventative. And it's all about planning. Like, you can't say, well, I got my score to a 640. I want to get a house built. And I know that that's going to take, 3 to 6 months to have it built, depending on what stage it's in and different things and the weather and different things like that, right? And then you have you've been in the credit repair program, and you know that your track record is that every other month you're getting a new collection added. So what that means is, if you're having collections added during the repair process, but you finally get to the point where you're approved to have a house built, if you don't continue the process during the building of the house, then there is a likelihood you're still going to have collections added, because it's a pattern, right? Credit is a pattern. If you're getting your updates and you see, well, I have a collection added this month, and then 2 months later I have a collection added, then that's a higher risk for you to go to have a house built, because in that duration of the house being built, you're likely going to have 2 or 3 more collections added. So you have options to either pay those things off and hope that it doesn't impact your score that much to be able to still qualify when they pull your credit again, or you may lose that house.
That's why it's important to always maintain a credit monitoring service.
Credit monitoring service is very important. It's very important, especially if you're buying a house. If you're not keeping track of what your credit's doing and you're having a house built, the worst thing that could happen to a person is they went and they picked out their house, and they picked out the colors, and they picked out the floor plan and everything. And 5 months in, that lender goes and pulls their credit again, and their scores drop 60 points because they've had 2 or 3 new collections added, but they had no clue because they weren't monitoring their credit, and now they don't qualify for that house anymore.
That will be that'll be a bad experience for anyone, Right. So I think the people that's on the opposite side, and they're viewing this right now, especially the agents probably saying, I need to send this to my client, or this is a good episode to teach people about the do's and the don'ts.
And the don'ts. Right.
So this is pretty much like everything that you just talked about was kind of like the do's and the don'ts.
Right. And I wanted to have an educational side to the real estate and really start at step 1 and break down each process in a very in-depth manner, because a lot of people, like you said, they just don't know. And I would rather us educate to the point of it's repetitive to somebody. Like we talked about debt to income and the debt on the credit file and things like that. But you have to understand your credit. You have to understand, what are you doing that impacts your credit, and what can you do to help your credit.
Right.
Those are the most important things that you can understand about your credit. Like, do I need to... Another thing that we see on people's credit files that just flabbergast me sometimes is, like, the small loan companies. They'll go get a loan, and then they'll refinance it, and it'll close, and it'll open as a new loan, like for $500 or $700 or $1,000. And it's like repeat. That doesn't look good on your credit.
Why not?
Because it makes it look like that you need a loan to sustain your finances month over month. It looks like that you can't budget and you can't financially. I had a lender tell me that, because there was a client who had, like, World Finance. It closed, it reopened, it refinanced, it opened again, it refinanced, it opened again. And she was like, what that does is it makes lenders look at them as a higher risk, because it looks like they can't manage their money month over month. So they're having to take out a loan.
Right. And I think it's just like the opportunity to learn and hear these conversations, because the people that's doing it in their mind, they get this thing in the mail, or they'll tell them, hey, you know what? We got a great offer for you.
Right.
Since you almost paid off your loan. We
can
can actually
refinance
increase
it.
it.
Yeah.
We can increase it for you. And the average person gonna be like, what? I can go from 500 to 700 or 500 to 1,000 now? Yeah, let's do it. And because they're telling it's going to help your credit, which it will over a period of time, if that's not a goal, if it's not going to impact your goals in life.
Right.
But if you're just trying to improve your credit, having that installment, it does help with mixed credit. But you also need to understand, if I look at the next year of my life, if I go and take out this new loan, how's it going to impact my goals that I have planned out for the next year?
Right, because you don't want banks to look at you as a high risk,
right,
or that you don't know how to financially manage your money because you're going and taking out these small loans month over month or every 2 or 3 months.
Can I give them a tip?
Yeah, go ahead.
So most people, as an installment, they have like a car on their credit.
Right.
That's enough installment debt right there, is that car.
For your mixed credit.
For your mixed credit, right? Because the mixed credit makes up 10% of your score. So I would rather get a credit card over another installment loan, because for one, that credit card is going to move my scores faster than a loan would. And a credit card doesn't look like debt on my credit if I don't carry a balance on it.
Right. Right. And student loans are installment. And let me tell you, there's enough people that have enough student loans on their credit to suffice for enough installment loans.
Oh, yeah.
So, and stay on top of your student loans. I can't tell you how many credit files we look at and they are in default. And then you're on that time frame. And that time frame, I can tell you from experience, is going to change, because a rehab program typically is anywhere from 8 to 10 months.
On the lower end.
On the lower end. I mean, every now and then they'll have like a 6 month or a 3 month, but you're going to be paying more.
Right.
And it may not be like a full rehab program to get it into a positive status. That may just be a payoff. And you only get one shot at a rehab.
Well, tell them so they understand what a rehab program is.
So that means that you're going to pay a small amount month over month, and you have to make those on-time payments for those consecutive months for them to pull that out of collections, and then they're going to sell it over into a positive account.
And I could tell you guys, if you have a student loan in collections and it goes into a positive status, I've seen people go from like a 600 to like a 720 just because they student loans converted. So,
yeah, I've seen big increases just because of student loans. And what people don't understand is that collection student loan, government loan hitting your credit month over month as a collection charge off, it is hitting your credit score month over month, because it's month over month, a collection charge off, and it's a government loan.
So that's why people sometimes see they go from like a 500 to like a 610, 620, and it seems like they just like capped off.
Right.
But they got the student loans and
sometimes
rehab.
not even that high.
Sometimes not even that high. But the thing is aggressively, if you watch Wealth Building Monday on this Monday that just passed, attack everything ferociously. So if there's student loans on your credit, you know what? Let me see what I need to do to fix this. Because they got so many programs out there to help you. There's income-based repayment programs.
Right.
The rehab program could have you down to like $5 or $10 a month. Anybody could just say, that's lunch for some people. I'll just skip lunch one day and have a peanut butter and jelly sandwich. But now that's my payment for the month. And I do that for 10 months. Now my score just jumped up 100 points.
Right. And we hate to see people that come and they're like, well, you know, I really need to be moved in 6 months, 7 months. And then we pull their credit file and we see that student loan in collection. Yeah. And then we're like, we'll tell you up front, that's not realistic. It's not going to happen, because I don't know of a lender one. And if you are a lender and you can get a loan pushed through with student loans and collections, please contact me. I would love to have your contact information.
Give them your number.
864-275-4564. But all of the lenders that I've spoken to ever, and I have a wide variety of lenders that I've talked to, none of them will approve a loan with a student loan collections.
You guys, you heard it.
So I know this went kind of off real estate a little bit and into more of a credit conversation, but I want people to understand the impact that credit has on real estate and your goals to become a homeowner. And it let me tell y'all about our new Pyramid Group package.
You guys heard it. Wow. I hope you guys learned a lot. That was a lot of good information. And I think this episode was like the do's and the don'ts.
Yeah.
The do's and the don'ts. You guys learned a lot about credit. You're trying to become a homeowner. Now you know like what to do and what not to do to help you achieve your goals and becoming a homeowner. So guys, thank you so much for joining us on YMA Nation Podcast, episode number 30.
Call Masters Credit Consultants. Take advantage of the package. I don't know how long it's going to be here. I don't know how long it's going to last. Hopefully we can keep it in place for a little while, but take advantage. Take advantage now.
864-249-9466 www.masterscredit.com. Guys, thank you again. Make sure you like, comment, and
subscribe
down in the comment section. Hashtag YMA Nation so you can make sure that you're in our cash drawing at the end of this month.
All
right, guys. We will see you on Friday for Friday football. All right.
What the bosses view. You gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association. Yeah, see, that's the association.